My name is James from Varsity Unlimited Tutors. For those of you that are joining us for the first time, we are an academic consultancy company that specializes in assisting students with their studies. We assist students in doing tutoring, just like this class over here, where we go through the content of your modules to help you understand better the concepts that the lecturers are trying to teach you guys. We do all the modules for advanced diploma in business management, that is your business finance, your microeconomics, your marketing management, your advanced management principles, even the second semester modules, we are also available for those ones. Now, what we usually do is that we take about 5 or so weeks to just go through the content. And then once we finish the content, we go through what we call exam preparation classes, where we are going through some past exam papers and just preparing you for the end of semester examinations. Usually it's 2 or 3 weeks, depending on the material that you are covering. Then within the first couple of weeks of the lesson, we will also cover your assignment. That is, we will go through the assignment that you have been provided by your lecturer, and we'll just give you the pointers of what you need to do so that you can at least get, a 25 out of 30 or something like that, so that you can aim for your what? For your distinctions. Last semester, we assisted, I think, over 70-something students, and most of them have very, very good marks. And I know that if you join us, you definitely also get good marks. Then in terms of our pricing, it's 650 Rand for the subject per semester, which means if you want more than one subject, you just multiply by the number of subjects that you're paying. You are free to pay a deposit and then pay the balance at the end of the month of September, after you've paid in your deposit. Just checking again. Professor Delight, are you in?
Hi, James.
Yeah, good. Good is in. So now that your professor is in, I'm going to hand over the lecture to him. But if there are any questions that you have for me, you are just free to ask them right away before he starts. If there are any questions that you have for me, you can ask them now before he starts. Any questions for me? No questions. Okay. I hope you all enjoyed the lecture. And as soon after the lecture, I'll send the recording of the video to the group in case you need to revise it. Then in addition to the lectures, we also offer one-on-one assistance. If you need the extra help, let's say you're not meeting your deadlines and etc., you can contact me on my WhatsApp, and we'll see how we can further assist you. Professor, you have the lecture.
All right, thank you so much, Mr. James. Thank you so much. Welcome everybody again to our, I don't know, first, let me say, am I audible to everybody? Am I audible?
Yes, you are.
Yes.
All right. Thank you so much. Thank you so much. Sorry that I know you were waiting for me, but I knew some were still joining in, so I didn't want to quickly come up here, because otherwise some would miss me. Right. So today I heard James asked me again that if I can give you another free lecture. Yeah, very fortunate. I don't normally give too much free lectures like this, but James just requested me that if I don't mind, I can give you this other free lecture. So I was just thinking, what can I do with you? Then I thought maybe it's wiser if I can do perhaps an example from a past exam question paper. I know that one maybe will go a long way for some of you who just want to have a feeling of what it is like to attempt a question paper, or what do we really expect in a question paper. So I just thought maybe let me quickly have a look at one question paper, which was a 20, I think, let me just confirm the year here. What year it was? All right, it's not a problem. So 2021 in January, which was a SAP. So perhaps let's just look at a question or two, or maybe just one question from there. Then perhaps it can help us to open our minds of what are we really going to be expecting when it comes to the final examination. Right. I see there's a chat here. Let me just quickly see. Okay. Thank you. Oh, says yes, I can hear you. Thank you very much. Thank you very much. Right. I remember it's business finance. It's business finance. I know many. There are many students, actually many courses, which are done under which also do the same paper as yours. Perhaps they are very they made before or so courses. I can't really remember very well, but I just know it's business finance. So basically, let's look at this question paper quickly, so that it can help us as we revise. Right, I'm going to be sharing the paper just now. Just give me a few minutes or a few seconds rather, so that I can share the question paper here. So I just thought maybe if we can start with an example of financial statements, and maybe we discuss it, maybe to give you a reminder before we get to touch many aspects, because we are going to be looking at various aspects under these this business finance course. So basically, some of the nitty-gritties or some of the small things that we're going to come across, we may as well discuss them as we go through this statement of comprehensive income. An example, maybe I will just be reminding you one or two other things that you might have even done, covered, maybe in your previous courses. And at the same time, maybe I'll be just giving you a feeling of what you will be looking for or expecting as we will be continuing with our course. Right. So let me just bring it up, this paper. All right. All right. Okay. All right, there we go. I don't know if all of you can see. Right, I don't know if all of you can see. Right.
Yes, we can.
Okay.
Yes, we can see.
All right. So perhaps let's just go through. I remember your course is ADB, isn't it?
Yes, it's
Yes.
ADB.
ADB, isn't it?
80.
Right. I don't want to make mistakes here. Otherwise, you say the professor is not serious. Eh? So it's ADB, Advanced Diploma in Business Management, isn't it? Business Finance. Your year is year number 1, isn't it? Right. Okay. Then question number 1. So this is about inventory. The question is about inventory. We will cover that topic. I won't be discussing anything here. I just want you to have a look at some of the questions that you might actually come across in this paper. So this is a 25-mark question. Question number 1. Somebody was asking me last time to say how many questions and how many marks. So I told you that it might be 5 questions or 4 questions, depending with the examiner. So in this case, you can see for yourself, it's question number 1 with a total of 25 marks. So it will be in parts. The first part, as you can see, is about inventory, right? The second part here, it's just something like theory, isn't it? Let's see the question. The question is in line with the above passage. In line with the passage above, discuss the various types of long-term finance available to a business like loanman. Right. So somebody was asking me last time to say, do we have to really worry about theory? So you see how many marks theory is carrying. is carrying 20 marks theory. Just imagine. So if you are not very good at number crunching, this is where you can score a lot of marks, because if you are talking about the different types of long-term finance, remember I spoke about this briefly, but you can have finance in form of equity, then you can have finance as well in form of borrowed finance. So this is what you will be looking at under long-term finance. I won't want to discuss much about that. Let's look at question number 2 with 25 marks. This is your cash budget, or rather, like I explained last time, that you'll be asked to prepare a debtors collection schedule. As you can see here, that's 2.1, debtors collection schedule. So we're gonna do everything. We're gonna show you the tricks here, how you go about it, because don't just look at say, oh, 10 marks. They might be as easy to get as easy also to lose. So the same way you can score all the 10 marks might be the same way you can lose all the 10 marks if you're not careful. So basically, this is all about the topic, what they really ask under the cash budget. They only focus on the debtors collection schedule mostly, and also your cash budget, right? I just wanted to see, it seems as if somebody posted something here. Unfortunately, I don't think I can see it now. Okay, I will respond. I just noted that somebody's posted. Right, okay, the cash budget is 15 marks, so that will give you your 25 marks. Let me not waste too much time on this, but basically that's what you'll be looking at if we're talking about a cash budget. Right, question number 3 is about ratios. So let me just give an advice to some of us who might be worried that am I really gonna make it or not? As you have seen, question number 1 has got 20 marks theory. So the other bet that you can use here to make your life much easier is this topic under question number 3. Normally they examine it. Most of the papers that I've come across, they are ratios. They are questions pertaining to ratios. Of course, they might ask you to give an additional interpretation, like in this case, they're saying calculate and interpret. So that part of interpretation is very, very important for you to master as well. But as far as calculating is concerned, I know most of you can do well. So just imagine that if you take maybe, let's say, your 15 marks, or let's say 20 marks under theory, then here you take again another 20 marks under ratios. It will make your life much easier, isn't it? Even though here, there, maybe you can just scoop a few marks from the other questions. I think it will be, you will be warm and dry. But the reason why we are doing these lectures is to help you now to say those areas that you think maybe they're a bit challenging, to make sure that you score some marks under those areas, and also you have already the bonus marks under theory and under ratios. So in this case, the ratios that we're being asked is just the profit margin, the debtors collections period, the return on equity, acid test ratio, and the debt to equity. As you can see, 5 marks, it's just giveaway. But remember, the commenting part is very important in this case. You are supposed to know how to comment. Like I usually joke with many students that when you are asked to comment, you are not asked to say it's good or it's bad. Every layman in the street can say that. When they look at the figures, they can actually tell you this is bad or this is good. So this is not the way we comment when we want to really present our work in a professional way. You don't say good, you don't say bad, you don't even say high or low, because anyone can see that this is high and this is low. It's like if you're given 2 years, I don't know if these were comparative, let me see. Also, in this case, they are not comparative figures, but normally they give you comparative statements whereby they give you maybe, let's say for 2020 and also for 2021. Then they ask you to calculate the ratios there and comment. So you can't say 2020, the ratio of 2020 is higher than the ratio of 2021. If there is any way where you hear that, or if you come across it, I don't know where you come across it later on, tell them that the professor says you are speaking the language of a layman, an ordinary layman from the street, isn't it? or a Tom and Dick. That's what they say, because every Tom and Dick knows this is higher and this is lower, isn't it? But when you are commenting ratios, that's when we talk about satisfactory, isn't it? Words like satisfactory. Now we are speaking like an accounts person or a business finance person. This ratio is satisfactory than this one, isn't it? And also, this shows more effective performance, isn't it? That's the language that we will be expecting, not high, low, good, and bad. Okay, let me not talk too much about that, because our focus here today, we just wanted to discuss a bit about this question, which is question number 4. I don't know if we are still together. It seems as if I don't hear anyone. Are we still together?
Yes, we are
Yes,
still
we're
with you.
together.
Yes,
Oh,
Professor.
why are you very
Still
quiet?
together.
Yes, Professor.
Yeah, here and there, someone should just cough, isn't it? And or maybe someone should just make I don't know what kind of a sound, so that I know that we are together. Okay. Right. Okay. The question number 4 is, you can say, it says the trial balance and adjustments and additional information given below were extracted from the accounting records of Leo Traders on 29 February 2021 at the end of the financial year. So let me also point out something here. Most students don't even bother to read this part. They just say, okay, question number 4. Then they go straight away to required. Use trial balance adjustments and additional information to prepare the statement of comprehensive income for Leo Traders for the year ended 29 February 2021. There they go. They don't even worry about, do you just think these people are wasting their time simply because all right, okay, is there an expectation to provide references during an exam? Normally, they exempt you from that. Normally, they don't require you to provide references unless otherwise, but normally they don't ask you. Right, okay. I think I was just responding to somebody here. Right, okay. Then I was saying you are supposed to pay attention to every detail that they give you. Like in this case, 29 February is regarded as the end of the financial year. So that information is important. Although it's also given here that for the year ended 29 February, but this one on top is more important because it tells us that the end of the financial year is 29 February 2021. Right. In this case, you are asked to prepare the statement of comprehensive income, of course, for the year ended 29 February 2021. But it might not be the end of the year, isn't it? But it can just be for the year ended 29 February, but the year, you are not told how many months, maybe in a year. It might be less than the 12 months that you're used to. That's why I'm saying this information is important, because it says the end of the financial year. So it means the financial year for this company is ending on the 29 February 2021. Right, okay. So that's very important. So it means if it's ending on 29 February 2021, it is starting the next month, which is what?
January.
May, isn't it?
March.
Sorry,
March.
February, March, right? Which is the 1st of March, isn't it? Right. So when you are calculating, please take note of those days. You are no longer starting from January. You are now starting from March, the 1st of March, isn't it? So if you are calculating from the 1st of March, it means March is your first year. Your first month, sorry, I mean your first month. Then you go March, April, May, June, and you go on like that, isn't it? If you see that sometimes it's difficult for you to really comprehend these months, it's better for you to put a chart. I will show you later on, whereby you list maybe, or you jot down your months, maybe let's say from March, April, May, June, on and on, isn't it, up to February? Because that information is going to be important when you are making adjustments in the statement of comprehensive income. Right. Okay, I just thought maybe let me emphasize this because later on when you're going to come across it, some of you might be starting to wonder, to say, hey, why are we doing this, isn't it? Right. Okay, so let's just look quickly at this trial balance. Right, as you can see, it's pre-adjusted trial balance. Pre-adjusted means there are no adjustments that has been factored into this trial balance. So it means we are going to be expecting adjustments under here. That's why they give us adjustments, additional information, as you can see. Why? Because it's a pre-adjusted trial balance. So let me also remind you that they might ask you now to prepare an adjusted trial balance. Yes, here they've given you a pre-adjusted trial balance, but they might as well ask you to prepare an adjusted trial balance. So don't just take this information for granted to say, okay, capital is on the credit side, drawings, they're on the debit. You should know why drawings are on the debit, why capital is on the credit side, isn't it? It's very, very important. So I will let you know later on, we will discuss why we take this on the debit side, why we take this on the credit side. But let me just say, maybe most of you might have a background of what it is all about, why this goes on the credit, why this goes on the debit side. Right. Okay. So as you can see, it's also very important before you attempt your question to just scroll down and see what is presented in this trial balance before you rush to the additional information. Right. So in this case, if we are going to go, we see first we have capital, we have the drawings, land and buildings, all these are assets. But we also do have what they call accumulated depreciation. So accumulated depreciation is depreciation that has that was allocated already, maybe to, let's say, to vehicles or equipment for the previous years. So it's depreciation which has been charged already, if I can say, isn't it? Right? So it's already in the past, but it's important. Why? Because it's showing us that this vehicle, although it was purchased at 369,000, we have lost so far 211,000. That's what it is saying, isn't it? So remember, the vehicles are on the debit and the accumulated depreciation is on the credit because it's a canceling entry, isn't it? It's canceling to say your 369,000, it's no longer 369. That's why we are also crediting this side with 211,000. If you go, you can see there's a fixed deposit. This is different from bank whereby you are given loan. This is you going to the bank and leaving your money there. So that's why this is fixed deposit with Win Bank at 10% per annum. Please take note of this information. 10% per annum. They are not just giving you for granted this information. Don't take it for granted. Remember, it's per annum. Take note of that, 10% per annum. I will show you later on why it's important. Right, if you go down, you can see trading inventory, debtors control, provision for bad debts, bank cash flow, creditors control. All these are current assets and current liabilities. And also this provision, of course, there's an adjustment. We'll talk about it later of how you adjust that provision. Right, now we have another loan. Like I said, this is a fixed deposit. You are the one going to the bank and depositing money with the bank. But in this case, the mortgage loan here, you are the one who has gone to the bank and borrowed this loan to secure on your what? On your premises, I don't know, or on your buildings, right? That's why it's mortgage loan. But as you can see, the rate is also given in brackets, which is 16% per annum. PA means per annum, right? That's as far as the assets and liabilities are concerned. Now we are coming to the other section, which is called the nominal accounts section. In this section, we normally come across expenses and also items of revenue, right? So for the first, as you can see, we have our sales there, which are going for which was 830,600, which is on the credit side, right? Because it's something that we are receiving. Then, as you can see on the debit, we have the cost of sales, sales returns, salaries and wages, bad debt, stationery, rates and taxes, motor expenses, marketing expenses, telephone, electricity, bank. Some are wondering, why is the professor wasting time just shouting these expenses to us? I am doing so because we don't go straight to start preparing the statement of comprehensive income without first going through to know what are we supposed to be taking into account or not. Let me give you a quick example. If you can notice here, there are sales, which is 830,600. But when you are in the exam, I know most students panic. They are busy. They just look and see sales already. They have thrown their sales there. But if you didn't go through in the first place through your question, you can't see that there are sales returns here, isn't it? So it's like when you are done or you're almost about to finish, then you start seeing, oh, I have left out the sales returns. It's going to affect everything that you have done or even before, isn't it? So what you're going to do now is start canceling, you start going back, you start changing figures, and you are confused already, isn't it? So that's why I'm taking time to go with you so that you can see that, oh, we have sales returns. In your mind already, it's clicking that, okay, I read somewhere about sales. I also read somewhere about sales returns. So that when you go now to prepare your statement of comprehensive income, you are not going to just hit the sales only without even considering that there are sales returns. At the back part of your mind, you still remember, no, there is something like sales returns that I've read. So that will help you to quickly take into account those sales returns before you make a lot of other adjustments below, isn't it? Right. So it's very important for you to read through. Like you can see here, I have these bad debts, but already I know I have seen somewhere where it says provision for bad debts. So I have bad debts, and at the same time, I have also provision for bad debts. You can see, isn't it? So it's very important for you to go through this before you attack your question. That will give you some leverage, isn't it? It's actually an advantage for you when you will be attacking this question. Right, as you can see, stationery, rates and taxes, motor vehicle, marketing expenses. I'm reading this out because I know there are adjustments below that will relate to some of these, isn't it? Insurance, interest on mortgage. Okay, I've read somewhere about mortgage loan. Okay, but here I'm told there's also interest on mortgage. Okay, mortgage loan was 16% per annum, and I'm told it's 132,000. All right, and here I'm also told there's interest on this mortgage loan of 20.5. So in your mind already, you're picturing, okay, I have a mortgage loan here, and I have also interest on mortgage loan, isn't it? So that will help you before you attempt your question. As you can see also here, we have interest on fixed deposit. Okay, I have seen somewhere where they talked about the fixed deposit. You scroll up, okay, oh, here it is. There's a fixed deposit here, all right? But here they are also telling me about the interest on fixed deposit here, all right? So something is happening. I have the fixed deposit, I have the interest as well. That's why I told you in the first place that these rates that are put in brackets, don't take them for granted. Why? Because it says the interest should be 10% per annum on the fixed deposit. If you can do quickly with maybe you can use your maybe quickly your arithmetic or whatever background you have. 10% of 79,200, you can see that is 7,920 quickly. Okay, so the interest should be 10% per annum. So it means it should be 7,920. Quickly, if you compare now with this interest that we have on the fixed deposit, it's 5,900. Oh, so it means something is happening. Why is it the interest there is supposed to be 7,920? But here, I'm only told that the interest on fixed deposits is 5,900. So something might have happened. Either there was maybe some interest or some fixed deposit that was withdrawn, or maybe something happened. You see, so already in your mind, it helps you to go through this first before you attempt the question, so that you can have an appreciation of what you're looking at. Rent income is also here as 68,600. Right. Okay. So let's now go and look at our question. Somebody was asking me last time that how do we really do it? How do we go about it? Okay. What we do now, the best way that I can maybe say that's the way you're supposed to do it. You start preparing your statement of comprehensive income. But when you come to the section of expenses, make sure that you start to deal with these expenses under the additional information before you tackle any other expenses that has nothing to do with the additional information. All right. Quickly, maybe let's do the number crunching. I know somebody's waiting for the number crunching. They don't want to hear me saying a lot of things here. All right. Let me work, maybe if I can, let me see if I can work in Excel. Let me see if I can work in Excel with you here. Let me see if I am able to do that. All right. Okay. No, I think for today, I won't use the Excel. I will confuse some here. Maybe let me do the Excel next time when I do with you another example. Maybe let's just work straight from the Word document. Maybe it might be a bit easier for some of you. Right. Let me see this Word document that I have here. Right. Okay. Right. So what I will do in this case, I have a template that I will use so that we don't waste too much time going through this, maybe trying to do one or two other things. We just use a template here. Right, okay. All right. All right, I will share with you what I have already done here, but I didn't want to share with you. Maybe it's not good. Let's first discuss before I show you my answers here, because I know some of you will become lazy automatically. Let's discuss first what we do with the first adjustment of stationery. Right. If we go back to our statement of comprehensive income, if you can check, we have the nominal section. That's where we see expenses. So here you can see we have stationery of 2,000, right? Okay, stationery here is 2,000, but under additional information here, we are told stationery cost 200 was taken by the proprietor for personal use. No entry has been made for this, right? So I don't know, maybe let me not be the one who is doing all the talking here. Is there anyone who thinks maybe wants to help us, or who thinks maybe they want to contribute something? We have stationery of 2,000 here, but let's say we want to adjust under expenses. What do we do if we are told that stationery of 200 was taken by the proprietor? So we have 2,000 stationery in the trial balance, but we are told the stationery of 200 was taken by the proprietor for personal use. What do we do under expenses? What do you think we do? Do we take the 2,000 and just record it? Yeah. Yes,
Shouldn't
yes.
the 200 rand be deducted from the 2,000?
Some may be asking why. Why are you deducting? Maybe you can help us to explain why do you think we are supposed to deduct it?
Because it has been used for personal use, not the interest of the business.
Sorry, come again.
I think we will deduct 200 rand from 2,000 because it has been used for personal use, not for the interest of the business.
Oh, thank you so much. Thank you so much. There is a concept that we are supposed to apply.
Which is a drawing. I don't know, it's drawing or something.
All right, it's called, all right, no, it's called a business entity concept, isn't it? Business entity concept says the business should stand on its own. The owner is separate from the business. We are not supposed to mix the two, isn't it? So in that case, stationery which was taken by the owner is not part of the.
Sorry, Prof.
Yes, yes.
Sorry to disturb. I
Yes.
just had a connection. Are we on the first question, the stationery question?
Yes, yes. We're just discussing the adjustment of what we do with stationery.
Okay.
Yes. So I was saying we have a concept that we say is called business entity concept. The business is supposed to stand on its own, while the owner is also on his own, isn't it? So in that case, stationery is supposed to be subtracted if it's taken by the owner for personal use. So that forms part and parcel of what we call drawings, isn't it? So because there was no entry, remember here, no entry has been made for this. So we're supposed to subtract, isn't it? So if you have somewhere where you want to write somewhere, I don't want to show you my answers now before we discuss. Just to say 2,000, just write stationery, 2,000 minus 200, and I know you get 1,800, isn't it? So that's the figure that we are going to take to a statement of comprehensive income. Let's go quickly, second adjustment. So this is what I prefer for you to do first. Before you do worry about everything in the trial balance, make sure you first deal with the adjustments, isn't it? so that it becomes easier when you're just going through the preparation of your statement of comprehensive income. Right, number 2, physical stock taking on 29 February 2021, which is the year end. You see, that's why we are having physical stock taking, because it's the year end. Showed the following inventories at hand. Trading inventory is 58,000 and stationery is 100. Somebody wants to contribute, please tell us, what do we do? Anyone with an idea? And I also want to ask you, we have trading inventory here of 60,000. And we have here trading inventory of 58,000. So in our trial balance, we have trading inventory of 60,000. But here after stock taking, we are told trading inventory is 58,000. Anyone to tell us what we do? Any idea?
The only thing I can say is it's less 2,000, but I don't know what happens there.
Okay. You know what
Hi,
normally
hi,
happens
Prof.
at work. Yeah?
Hi, Prof.
Yes,
Prof.
yes. Yes.
I think the stationer of 2000 has been stolen, eh?
Yes, yes. There are some people with long hands.
Yeah.
So it so simply happens that when you do whatever the stock taking, something is always missing. You guys, you know what you do. You know your deals there at work, isn't it? I'm happy that I'm not part of you guys. Eh? So in this case, right, if you have somewhere to write, just say trading inventory loss 2,000. So what we do is we say 60,000 minus 2,000, isn't it? Is equals to 58,000. So it means there was a loss. So this we're going to charge it as an expense. Somebody stole that 2,000 or something happened. I don't know what happened, but we're going to charge it as a loss. So it's an expense, which is a trading loss, isn't it? So remember, this adjustment is always there. You will see that whatever I'm doing with you now, you will see it in the exam. It's always there. That's why I'm taking my time with you. What about stationery? We also see that there's something stationery on hand, which is 100 Rand. What do we do? Anyone with an idea? Sorry?
Prof, on the, maybe let me take you back on the trading inventory.
Yes, yes.
Why it might be less than what is in the balance sheet. It might be that the trading inventory of a difference of that 2,000 might be obsolete stock.
Yes, it might be obsolete stock, you're right. But all the
Yes.
same, we are going to treat it as a loss to the business, isn't it?
Yes.
Yes, but why are you not agreeing to what I'm saying, that it's somebody has long hands here?
That's
Maybe it doesn't happen to your workplace.
No, it's not that I'm
it's still the same
disagreeing.
thing. No. I hear you. I'm just teasing you. Don't worry. I hear you. I'm just teasing you. It might be obsolete inventory. You're right, isn't it? Maybe inventory might have been not only obsolete. Maybe it might have expired, isn't it? And you dispose it, isn't it? As an organization, maybe let's say it's a retail, maybe supermarket. Normally, sometimes you are not allowed to sell stuff which is maybe expired. So sometimes you might just get rid of it, and that might also account for that 2,000, isn't it? Right. No, thank you so much. I agree with you there. What about stationery? We see we have stationery of 100. What do we do?
I think we add that 100 Rand for stationery on the 1,800.
Why?
Yeah. On the 1,800
Why?
stationery that.
Yes, don't worry if I ask you why, because maybe you are saying, why is the professor asking me? No. What I want you is to understand the concept behind what you are doing, isn't it? Because I don't want you to just throw figures without a reason. That's one thing that I have seen whenever I was teaching many students. They just throw numbers sometimes without reasoning behind why am I doing that, isn't it? So this is what I'm trying to help you to say. Yes, you are saying we add it back, but I want to understand what is your reasoning behind. Why are you adding it back?
We are adding it back. Remember, we have a stationery of 1,800, which we have and then we have 100 rand stationery on hand. So we add it to the stationery that we already have in our business. I don't know if I'm correct.
All right. Okay. Is there anyone who is thinking otherwise, or we are all agreeing with what we have just been told here?
What
Yeah,
might be happening is that maybe on the system shows that we have a stock of 1008, but when we physically check at the stock, we still have 100 rand of the stationery, so we have to add it on.
All right. Okay. Anyone who thinks otherwise?
Yes, Prof.
Yes. Yes.
My take would be that we purchase stationery for. By the way, in the not the balance sheet. What is on top there? The balance.
The trial balance.
The trial balance. I mean to say, yeah. In the trial balance, how much is it? Is it 60?
Yeah. It's actually 2,000 in the trial balance.
Oh, it's 2,000. Yeah. So
Yeah.
which means that we've bought stationery for 2,000.
All right.
And we debited stationery with that 2,000.
Okay.
In terms of the T account. But then what it then means in terms of taking into account the first adjustment of the stationery at cost that was taken by the owner for personal use. We have reduced it by 2,000, means
to make it 1.8, isn't it?
We have credited stationery, and then we're left with a balance of 1.8. But when we did stock take, the closing balance was therefore 100 rand.
All right.
So it means that the difference between 1.8 and the closing balance of 100 rand, the 1.7, which means that is the stationery that has been issued out for use in the business.
I think you work under the inventory department, you. Exactly.
So for the period that we are quoting, it means we use stationery valued at 1.7.
Very good. Thank you so much. Don't feel discouraged if maybe you didn't get it. This is how you learn, isn't it? Those who have contributed have already mastered it. So let me explain like this. Stationery, unlike inventory, stationery is what you, let me give you an example. Maybe you are using some books, isn't it? Or maybe some receipt slips. That is what we call stationery, isn't it? So stationery was bought for 2,000, as we can see in the trial balance. But 200 was taken by the owner. So it means the business used 1,800. But when they are now doing the stock take, they see there's 100 remaining. So what it means is there's a concept that we say is called accounting year-end, or maybe I'll remember the name quickly. But it talks about we are supposed to take into account only expenses that has been incurred for that accounting period. Is the accrual concept, right? So the accrual concept says we are supposed to consider the expenses that has been actually incurred by the business, isn't it? So in this case, the business bought stationery for 2,000, but 200 was taken by the owner. So which means we are saying 2,000 minus 200, we agreed there we have 1,800, but we don't add back the 100 which remained, because it was not used in that accounting period. Remember, that's why I told you we are preparing for the year ended 29 February 2021. So during 29 February 2021, that year end, we did not use that stationery for 100. So we are not supposed to take it into account. We are supposed to take it away, isn't it? So it means actually we say 1.8 minus 100 again to get 1.7, because that's the stationery that was actually used during the accounting period. Oh, this gentleman was also talking about T accounts. Don't worry about that. Maybe if when we will be revisiting some areas about accruals and prepayments, I will show you that this was a prepayment. Why? Stationery has not been used, so it's going to be used the next accounting period. which means it's prepaid. So generally, we subtract prepayments from our statement of comprehensive income. I don't know if I'm clear. Am I clear? Everybody's quiet.
You
Yes,
clear,
Prof.
Professor.
Yes, you are clear, Professor.
All right, thank you so much. So I am explaining this because it's very important. You see it even in your exam. They don't normally change these things. So take note of that. So it's 1.8, sorry, 2,000 minus 200, which was taken by the owner, minus 100, which is left, which we did not use. Right, number 3, write off the account of a debtor, R. Smith, 1,000. All right, remember, we saw bad debts here, isn't it? There were some bad debts here when we were scrolling down. Yes, 7,500. So we are told to write off again an account of another debtor of 1,000. So what do we do? Somebody? What do we do?
You add the 1,000 by the
Thank you so much.
7,500.
Yeah, you just add. So it's like our bad debts will be 1,000.
8,500.
7,500 plus 1,000. Thank you so much. Let's go next. Oh, we are talking about provision now for bad debts must be decreased by 500. This is a concept that some of you might not be aware of, but I know some of you. Yeah?
Sorry, Prof.
Yes,
If we're saying we have to write it off, why are we not minusing it, but rather adding it?
Okay. What happens is already in the trial balance, we have people who have already failed to pay us back as the business. Already during the year, we are told 7,500 people, 7,500, which was owing from some customers, was not paid, isn't it? So that's what they call bad debts. So on top of that, there's another data also we have identified at the end of the year, which is called R. Smith, is also owing us 1,000 and is not able to pay. So it means we are supposed to add so that we get the total of bad debts. And unlike stationery, this is a bad debt, isn't it? It's people who are failing to pay us. So on top of the 7.5, we have also another 1,000, which is not likely to be paid. So that's why we are adding.
Thank you, sir.
All right.
Prof,
Then,
Prof, on
yes.
the flip side of that, in terms of answering this question,
Yes.
why are we not subtracting it? I mean, to say, yeah, why are we not subtracting it and adding it to the bad debt? Is that we are subtracting it from the accounts receivable or
exactly. You're still right as well. We will subtract that from the accounts receivable. That's where that's what I wanted to explain here under provision for bad debts, isn't it? That the accounts receivable, these are our debtors. This is another name for debtors, accounts receivable. So our debtors is showing 70,000 here, isn't it? Right? And that is after taking maybe away this provision for bad debts. But this provision is normally for the previous accounting period, isn't it? So our debtors here are 70,000, right? 70,000, then we have bad debts already. Those who have failed to pay us 7.5. Normally, this will be considered, this would have been considered in the total debtors here of 70,000. The 7.5 would have been considered, isn't it? Because it was adjusted. It's in the trial balance. That's our assumption. If everything is in the trial balance, it means it has been taken into account. That's the general assumption, right? Then this 1,000 was not taken into account. So we are going to subtract it from our debtors, isn't it? Because it's somebody who was there but is no longer able to pay. Right. The provision for bad debts now, it's now given that some people are not able to pay, we are supposed to provide for those guys to say, hey, likely we are not going to recover something from these guys, isn't it? So the business is rather providing 500 to say maybe debtors of 500 will not pay us also on the remaining, isn't it? So the total debtors before anything was 70,000. Then we subtract another 1,000 here, isn't it? For debtors who, for R. Smith who has failed to pay, isn't it? So it means we are left with less, isn't it? We are left with maybe, let's say 69. It was 79. Oh, I quickly forget these figures. 70. So we're left with 69, right? Then on top of that, we are expecting that other debtors might as well fail to pay, isn't it? But in this case, it's a decrease. From what? From the 4,000. So this concept, that's why I was saying I need time to explain this concept to some of you who have never come across it. So provision for bad debts were 4,000 for the previous accounting period. But these are going to decrease by 500, which means we now have 3.5. So in other words, 3,500 of our debtors we are likely not to pay us from the 69,000. So it's again 69,000 minus 3.5. But what we do in the profit and loss or statement of comprehensive income, we simply take this decrease as income. If provision for bad debts is decreased, it's income. So just write, don't worry if you don't understand me on this, because I haven't taught you about it. So I don't expect you also to understand it easily. So just write down decrease in provision for bad debts, it's income of 500. Just write that. That's fine for now. I will explain everything else maybe when we will be doing those bad debts. Right. Okay. I see our time is flying. Hey, I'm talking too much here. Right. Okay. Rent income amounts to 4,900 per month. Make necessary adjustment. This is what I was telling you now, that it's important for you to know your year end. Our year end is 29 February of 2021, but we are told rent per month is 4,900, right? But in here, we are told rent amounts to 68,600. So what we do is, before we worry about the rent, which is in the trial balance, we simply say, if rent is 4,900 per month, let's calculate by 12 months, because our year has got 12 months, isn't it? So can somebody help me just to say 4,900 times 12?
It's 58,800.
58,800.
58,800. So if you compare now, 58,800 and 68,600, it means there's too much rent, isn't it, here? Because we were expecting 58,800, isn't it?
Yes.
Yes.
But here, our rent, which is in the trial balance, is 68.6. So it means, like the accruals concept that I was telling you, we are supposed to consider only rent for this year. So why is it we have too much rent here? It means some people have paid us in advance, isn't it? They have paid rent even for the next month. You know, rent is always paid 1 month ahead, isn't it? So in this case, it means the rent that we are supposed to record under expenses is that rent for 58,800, isn't it? So just to say rent income is supposed to be 58,800. That's the rent that we were expecting for that year. So in simple terms, we record things or expenses that are relevant for that particular year. We don't record anything else which is not part and parcel of that year. So in this case, rent which is supposed to be recorded is only 58.8, which means the remainder here is a rent which has been paid in advance, a prepayment. So if you want to see the prepayment, you can always say 68,600 minus 58,800. I don't know, it doesn't give us 10.4. I'm not sure. I'm just using my head here.
It's 9.8.
9.8.
9.8 somewhere there, right? So the 9.8 is the prepayment. It's not part and parcel of this year. We take it into account under the statement of financial position. Let's not worry about the statement of financial position now. Let's just worry about the statement of comprehensive income. Right. Let's talk about the water and electricity here. I have seen the water and electricity under the trial balance as well. They say the water and electricity account of 2.3 for February 2021 has been paid. So this is water for February 2021, which is 2.3, has been paid. But the payment was, Iran is still posted to the telephone account, right? So it means there was an error here, whereby the 2.3 was posted under the wrong account. Instead of it being posted under water and electricity, it was posted as an error under the telephone account. Anyone who wants to tell us what do we do here?
I can give a quick guess on that one.
Yeah, it's fine to guess. Don't worry. Just guess.
Yeah, I think we're going to subtract 2,300 from the telephone account.
Yes, you're right. So it means we go to the telephone account here, 17.8. So whosoever is writing down, you say telephone 17.8 minus 2.3, isn't it? Because it's not part of telephone. It was an error, isn't it, to post it to the telephone account. Then what do we do next?
And then we add 2,300 on the water and electricity account.
For this month, isn't it? Yes,
this
because
month,
it's
yes.
part and parcel, it's for February 2021. But if it was for March 2021, isn't it? It means it's not going to be part of our water and electricity. We are supposed to take it out, isn't it?
Yes.
All right. Thank you so much. Let's go to rates and taxes. Rates and taxes. 2.4 was paid for the next accounting period. Oh, I have already told you the answers there. Who wants to contribute? Who wants to contribute? Rates and taxes 2.4 for the next
Actually,
accounting.
a prepaid expense.
So we just take it out, isn't it?
You
So we
just
go
take it out.
under rates and taxes. We have our rates and taxes 23,000 here. Then we simply take it out, which is 2.4. Is somebody saying something? Sorry. All right. I was saying rates and taxes of 23,000. Then we take it out. We take this prepayment of 2,400. Why? Because it's not part of this accounting period. So if you get this point to say we only record expenses and income which is relevant for that accounting period, then we are good to go. You can now, even without you even learning the other concept, you can even prepare something that's meaningful, because you know we are supposed to record items or expenses or revenue for this accounting period. So whatever was not part of this accounting period, we take it out. Whatever was part of the accounting period, even if it was not paid, we include it, isn't it? This is the accruals concept, isn't it? Right. Number 8, amount of 100 appeared in the February 2021 bank statement for cash deposit fees. This amount was not recorded. Oh, what do we do? Anybody to contribute here? Hello?
I'm just guessing. So
Yes,
if it
you're
wasn't
welcome.
recorded, I think we should add the 100 rand.
Thank you so much.
Onto
It's
the
part
cash
of this
deposit.
accounting period, isn't it? So we add it under bank charges. I don't know if we have bank charges here. Yes, you see bank charges 3.3, then we add that 100 rand to those who are writing. All right, let's go next. Let's go next. The investment in the fixed deposit was made on the 1st of March 2020. So we said our year end is 29 February and it starts on the 1st of March, isn't it? So this is the last year. When the last year started, or this accounting period started, it was on the 1st March of 2020. That's when we made this fixed deposit, isn't it? Right. So let's go and check our fixed deposit. Our fixed deposit here, you can see it's 79,200. We made it on the 1st of March at the beginning of the accounting period, right? But we are told here we are supposed to charge, we are supposed to receive actually 10% per year. So 79,200 times 10%, it means it's 7,920, as I explained earlier, right? But here we see the interest that we received as the business, it's only 5,900 instead of 7,920. Anyone who wants to say something, what do we do?
We must add 2020 rand.
Or to get what?
To get
7,920, isn't it?
7,920.
Because we were supposed to receive income or our interest on fixed deposit of 7,920. That's what we're supposed to receive, isn't it? Right?
Yes.
So we did not receive that 7,920, but actually we received less. But given the accruals concept that I explained to you, we're supposed to record everything that belongs to this year. So it means we're supposed to be given our 7,920. So we add that difference to get our 7,920, or we just record the 7,920 without any worries. But the remainder here, we are going to worry about it under the statement of financial position. We will worry about it under the statement of financial position. Right, that's as far as interest on fixed deposit was concerned. Let's go next. The loan from Winbank was also obtained on the 5th March.
Sorry,
Yes,
Professor,
yes.
Before you continue, what might be the possible reason for recording 5,900 there instead of 7,920?
No, we said we record 7,920, but you are asking in the trial balance.
Yeah, I'm asking you on the trial balance. What might be the possible reason for
Okay,
this
what happens
5,900?
is that the bank might credit us later on. You see, this is the year end 29 February, isn't it? So maybe the interest for that remainder or for that month of February, our interest on investment might not have been credited as yet by the bank, isn't it? So
Okay.
it might not be reflecting. So you as a bookkeeper or as an accountant or whosoever is doing the books, you might not know that when is the bank going to transfer it, or they might transfer it 5 days later. So it's not part of, it was not recorded, but it's part of this accounting period, isn't it? So it means
Yes.
the bank is owing us, in other words. So that might
Gotcha.
be the reason for the disparity there.
Okay, thank you.
Right, okay. Thank you. Okay, the loan from Win Bank was obtained on the 1st March. This is the loan now. It's the opposite of the interest of the fixed deposit. It's now the loan, isn't it? And here they tell us that the outstanding interest, it means we are the ones who are supposed also to pay, but we did not pay 620. It's outstanding. Right. So if we have an interest here of interest on mortgage year loan of 20.5, but we did not pay 620, what do?
And
We just add, isn't it? So that
Add.
it is relevant for this accounting period. So we simply add. To those of you who have had depreciation before, depreciation is just the loss in value of a fixed asset. So in this case, our equipment here is supposed to be depreciated at 10% per year on cost, isn't it? Right? So if it's on cost, we simply multiply straight by the cost of the equipment, isn't it? Yeah, so we just go to our equipment here. Equipment was costed us 264,000 times 10% is 26,400. This is the loss in value for this year of using equipment. Because remember, as equipment is being used, sometimes there's wear and tear, and also sometimes some employees might be throwing it up and down when they feel that they are, I don't know, you've delayed with their salaries, they might as well kick the some components. I don't know, you know what happens at your workplace there. There's always drama, I know. Right. So that kind of actions, or the kind of actions, might result in wear and tear. And at the end of the day, our equipment might lose value. So if we have 264,000 as the cost of the equipment, then we are experiencing, we are expecting to lose maybe 10% for the accounting period. That means it's 26,400. So we just charge it as an expense. Depreciation is an expense, right? Okay, then the same applies here on vehicles, but vehicles are using a different method. This method is called diminishing balance method or reducing balance method, right? So it's one and the same thing. It can be diminishing or reducing balance method. So in this case, you first subtract the accumulated depreciation on the vehicle. So this method says first subtract the loss in value of the previous years before you calculate the loss in value of the current year. So in other words, we are going to simply say our vehicles are 369,000. So we subtract the loss in value of the previous years, which is 211,000. Can somebody do it for us? If you say 369,000 minus 211,000, what do we get?
158,000.
Yes, then on that amount, we say times 20%. That's the depreciation that we are supposed to charge. If you multiply by 20%, what do you get?
31,600.
All right, so that will be our depreciation. So diminishing balance method and on cost, if you hear on cost, it's a straight line. You are not doing anything, isn't it? They can say straight line method or on cost is one and the same thing. But diminishing or reducing, you first subtract the accumulated depreciation, right? I think I have explained the adjustments. This is the most important part, the adjustment. Of course, I know the next thing is you are saying, then can you simply, let me just show you a draft here of the answers, that the expected answers actually. Let me just show you a draft. I don't know if normally I don't normally worry about these answers. Sometimes I really prefer to do the number crunching with you than looking at the other answers, even though I work them before even it's part of my working. I really don't want to rely on that. All right, but I will just do the screen sharing now. I don't know what is happening with my, seems something was written here. Is it only on my screen?
No, we can also see it.
You can also see it.
Oh, I don't know who is writing something. All right, let's not worry about that anyway. Let's just worry about what we are supposed to be doing now. All right. Okay, so let me just quickly try and share. All right, I will stop this sharing will this paper be made available? Yes, the paper, if you want the paper, it's always available. I will make sure that James has the paper so that James will give you the paper. Right, I think that was increased that amount, bank charges, whatever. All right, I was just trying to make sure that right, we are on the same page. Okay, so quickly, don't worry about all this one. Right, okay, let's go here. I don't know if everyone can see, or should I increase the font here? Right, are you now seeing my screen?
Perfect.
Yes.
Yes.
All right, so this is the way we might present your answer. So if you can see the sales here, this adjustment is for sales returns. The 5,000 is for sales returns. So I know some of you might have forgotten, or might, I don't know, not you might not recall it from your previous studies, but this is the way we present maybe the statement of comprehensive income. We say sales, then we take out the sales returns, we say less cost of sales. So I assume the cost of sales we're given, which is 317,600. So this is just general. I don't think that will give you a lot of problems. Then to arrive at your gross profit, you simply subtract, you say your sales minus your cost of sales, you get your gross profit. But let me just talk something about this income here. You see the rent income, like we said, you put 58,800. Why? Because this is the amount which is for the year, isn't it? Right? Then the bad debts, I told you, if it's a decrease, it's going to be income. It's good for the business because we will have less debtors, isn't it, who are going to default. So in this case, that's why you say the bad debts is here, isn't it? Sometimes they are supposed also to put interest here on fixed deposit, but your examiners normally prefer your interest to come down here, isn't it? Which is profit after operating profit here, right? Or before, after operating profit, right? So the interest income that you see, the interest income here, is actually that interest that was received, isn't it? That's why we say we record the 7,920 like it is here, isn't it? Right. So let's talk about these other aspects under the expenses, right? As you can see, right, this is 2,000 minus 100. Right, this person left out the 200. You still remember the 200 we discussed here? Right,
Yes.
so the 200 was left out here, please. So you have to take into account that 200, which was the 200 which was taken by the owner, isn't it? Right. Okay, the trading inventory loss, I'm sure everybody has it here, isn't it? Right, the bad debts, like we said, they are added. Can you see? 7,500 plus 1,000, we have the bad debts. Your electricity, this was the electricity which was included under telephone, isn't it? So it's taken out from telephone, then it's added here under water and electricity, right? Then the rates and taxes here, we take out 2.4, right? Was that the adjustment we agreed there? Am I alone now? Where is everybody?
We are on
Yeah.
unmute.
We
We're
agreed,
checking
yes.
our notes. Yeah, it was subtracted.
All right, good. Bank charges we added, isn't it?
Yes.
Right, then the depreciation on equipment, we said that was straight line method. Then the vehicles, we said you subtract and what. I think that was 31.6, isn't it?
Yes.
Right, the
Yeah.
salaries. So you see, what we start with, what I encourage, you start with adjustments here. Every expense with an adjustment, you do it first. Then after you go now to just check these salaries and wages, there was no adjustment. Motor vehicle expenses, there was no adjustment. Marketing expenses, there was no adjustment. Insurance, there was no adjustment. Normally, if I were the examiner, I wouldn't give any marks for this.
Why?
Because why can I give you free marks? There's nothing for free in this life. Eh?
Prof,
No,
it's not free.
It's an understanding.
No, it's free marks.
No,
Where do
it's
you?
understanding.
But
It's
the fact
understanding that
but-
you just put a salaries and wages and expenses.
Given.
No, some of us.
It's
we-
our
we-
Oh,
we-
you say
energy.
it's given.
My energy, my
Guys,
time. I must be paid
you
for
should
it.
not like free stuff like this. If you like free stuff, you're gonna be in danger. Right. No, I'm joking with you. Let's go next. Under the interest expense here, we agreed that it's 21,120, isn't it? We're supposed to say to add the 650, which was not there, if you still remember, isn't it?
Yes.
Right. So this answer was wrong here under stationery. This answer was wrong. Whosoever did it, I think they forgot to make an adjustment there. Right. Any questions? Any questions as far as this answer was concerned? Any questions?
Yes, Mr.
Yes,
Professor.
Yes.
No, I want to ask if there will be a principal mark. Let's say I put the wrong figures, but the method is correct. Will they mark it correct?
Yeah. You see why? You see why I am putting these brackets here? Because it is if it was 2 marks, isn't it? So it means you have shown your working, huh? Then your answer is wrong here. Of course, I must give you a mark for showing your working. That's why they say show workings. Yeah. But let's say, like in this case, let's say this person did not put this working, but they left out the 200, isn't it? They're going to lose all the 2 marks. Yeah, so showing working is very, very important, like what I'm doing there. Or you might not show it as part inside here. You might just put a separate section somewhere where you say workings, isn't it?
Hello, Prof.
Yes.
There was a question whereby you said this will go with cost. If you may go to that question, I've got a question based on that question. If you may scroll up.
Or depreciation.
I'll tell you when I see it. If you go up again to the questions that we had.
Or so I should stop sharing here, isn't it?
Yeah, you must go to the other one. Yes.
All right, the other one. Okay, let me see if I still have it with me here. Yes, I have it with me. Right, you can ask what you are saying.
Please scroll up. To the questions that we are asking with regard to what you see on the balance sheet. Yes. There is a question whereby you said only cost. Only cost. Yes.
Is it depreciation on cost here?
Yes, that one. Number 11.
Yes.
The first asterisk. What will be the other option besides the one which says on equipment at 10% per year on cost? You said something right there, which you say whenever you see this question, which says on cost, just know that this is straight. What other alternatives that we can have as a question?
On cost, the method that they are using, it's called the straight line method. So if they say depreciate equipment at 10% using straight line method, is the same as saying per year on cost.
Per year on cost. So that's the only kind of question that we can come across, or do we have alternatives that may come to say per year on something, not on cost?
It's only on cost or a straight line method only. Yeah. Don't worry. It's only pay cost or on cost or a straight line method. That's one and
So
the same
the
thing.
straight line method, how will that be calculated then on the equipment?
It's the same thing. Just
The same
10%. Yes, you just go to your cost, isn't it? Straight line, it means you're going straight to the cost. It's straight, isn't it? So you just go to your equipment. It costs here 264,000 times 10%. That's all. But sometimes they can say over 5 years, isn't it? That's what you're asking.
Yeah. Yes.
Over 5 years. All right. If they say straight line for 5 years, you simply divide the cost year 264,000 divided by 5, then that will be the amount of depreciation you charge every year.
All right. So in most cases, I see the statement which is more into millions.
All right.
So will the principle be the same? Because I've seen that on Sunday Times when they say this is the balance sheet for this particular company and this is the capital, this is the whatever millions.
Yeah, it's the same thing. Yeah, but normally these companies, what they do, they might end up using different techniques of depreciating their stuff, isn't it? But in general, for now, let's just say it suffices for us to say the straight line method and reducing or diminishing balance, whatever the amount, that's what they use. But I know that some companies, they play around with the figures and they might want to confuse the taxman, isn't it? So sometimes that's where it comes up. They will be playing tricks there. So let's not worry about that for now. All right. If there are no any other questions, should we call it a day?
How?
There are no any other questions, so let's call it a day. So this is your second free lecture. So I hope you're gonna remember it and you're gonna enjoy it in future, right? If there are no any other questions, then I will leave this time to James. James, are you there? James? Oh, I'm not sure if James is with me here.
Hello?
James left us.
Yes.
Yes, I'm handing over this session to you.
Oh, okay. Good.
All right. Thanks so much.
Okay. Thank you guys for coming in. I hope you all had a wonderful time. So as advised, next week we are meeting again at 7 o'clock, but next week it will only be for the students that have paid for the lectures. Then I'm sure the professor is already working on your assignment so that even, I don't know if you will start next week or it will be a different week, but I'm sure within the next 2 or so weeks, you guys will already be working on the assignment with the professor. So I'm sure you enjoyed yourself. Therefore, sign up, join up, make the payment and send me the proof of payment. And then we can make sure that next week you'll be with us. Then our next lecture is on Thursday for microeconomics. It will be a free lecture on Thursday for microeconomics. So you are free to come in and join me as we discuss some economic concepts. Are there any questions that you have for me before we close for today?
Hi, James.
I just wanted to ask, are we also going to do the economics assignment in next week's class for us that have paid for the extra tutoring sessions?
Yes, what we are going to do is the assignment, we'll work on it the following week, that is Thursday next week. But this week, because it's still a free lecture, I won't be available to do the assignment, but I will just introduce, because remember last week we started at the middle of the module, but what I'm going to do this week is I'm just going to take unit number 1 and unit number 2 and just introduce the whole concepts of economics. So it will actually be a 2-hour lecture because we're going to go from 7 up to 9. We're just introducing everything about economics so that when we start on the assignment next week, you guys are prepared and are aware of what we are talking about.
Okay, so next week we're going to be A4 with the assignments.
Sorry?
So next week we're going to be working on the assignments basically.
Yes, we're going to start working on the assignment.
Yeah.
We might not complete them, but we're going to start.
No, that's fine as long as we just start somewhere. Thank you.
Okay, thank you. Cool. Okay, any other questions?
Hello, James, which account are we making the payments into? The school's account, or is it a separate account?
No. As I've advised already, we are a private company. We are not Mancosa affiliated. We are a private company. I've sent the banking details in the group. I'll send them again in the group so that you can make the payments. I hope that's clear.
Okay, thank you.
Okay. Any other questions?
Yes, Mr. James. Now we're having a marketing class on Friday. Yeah?
Yes, there is a marketing class, introduction to marketing, on a Friday at 7 p.m.
Oh, it's also free.
Yes, it will be free.
Thank you, Mr.
Okay. Any other questions? Any other questions? Okay, I trust.
So, Mr. James, you saying that tomorrow we off the hook, eh?
No, Wednesday we don't have any lectures on Wednesday. We're off the hook.
Okay, thanks.
Okay, so it's Monday. Monday we do advanced management principles. Tuesdays, business finance. Thursdays, microeconomics, and Fridays we do marketing. So that's what the timetable will look like going forward. Okay, thank you guys for coming in. I hope you enjoy your night.
Thank you, James. Bye.
Bye-bye.
Thank you, James.
Thank you. Bye.
Bye-bye.
Bye.